get started would be a quick and short introduction of yourself and your professional or personal association with Sri Lanka.
Hi everyone, I'm Hishan. I'm part of the Cinnamon Hotels, which is part of the Jhon Keells Group. Jhon Keells Group is the largest, or one of the largest listed companies in Sri Lanka, looking in sectors such as retail, leisure, transport, financial services, and property development. But Jhon Keells has been investing in the leisure industry for many years, and Cinnamon Hotels has 14 properties across Sri Lanka and Maldives. We have 11 in Sri Lanka, 3 in the Maldives, and we are looking at expanding. In terms of our operational size, we have about 2,500 rooms, employ about 5,000 people in Sri Lanka, so we are really proud of that, and we are looking to grow in Sri Lanka as well.
Hi everybody, I'm Roman Scott, Chairman of the Calamander Group. I'm an economist and a former banking consultant. I'm not a hotelier. I made a commitment to invest $5 billion after the war in Sri Lanka. My mother's Sri Lankan and I wanted to do something here. We're in hotels, food and beverage. Coffee Bean is a brand, I think you know. We manufacture food. We do some real estate development as well. I'm also running a little experiment of investing in Britain, in hotels in Britain, and parallel to what I'm doing here. And we have some stuff in Singapore.
Good morning, I'm Thilan, Wijesinghe. Today I'm wearing the hat of a policymaker. I'm chairing the National Agency for Public-Private Partnership in an honorary capacity as a former investment banker and also as former chairman of the Board of Investment, where I got involved in many PPP transactions in the late 1990s. So this position I've been holding just for a little more than a year. But I also happen to be, post my innings as an investment banker, a hotelier, both as a CEO of the now Asian Hotel Properties, which is the owning company of the 2 Cinnamon Hotels. I ran it on behalf of the former shareholders and was behind the transaction to sell it to Jhon Keells. I'm also a co-founder of Dilma's leisure business and a shareholder of Ceylon Tea Trails, which is a very successful small luxury hotel. And I also sit on the board of the owning company of the Anantaras and the Avanis, which is a joint venture with Hemas. Unfortunately, Dilip is not present here today.
So Thilan, let's just start with you. You mentioned you wear various hats, and we would like to have your perspectives as a policymaker and as an entrepreneur. But before we get to talking about investment from the private sector side, let's hear your views about the role played by the public sector with regards to tourism in Sri Lanka. And what are the key issues that are being addressed today, and what can we expect going forward?
Let me answer that question, Dhruv, in putting Sri Lanka in its correct context. I, as a policymaker and also as an entrepreneur, have been perplexed by the fact that why Sri Lanka ranks in the top 5, or if not the top, in various international rankings from New York Times to Lonely Planet. But when it comes to the Tourism Competitiveness Index, as per the World Economic Forum, we are in the top 5 in the former, but we are number 63 or 65 out of 136 countries. So we do not rank well at all when it comes to competitiveness. And there's a whole host of factors. I mean, if you were to look at our ranking, as Murtaza pointed out, on ICT readiness, we are 100, below average. In terms of environment sustainability, 93rd. Of course, we rank higher relatively on prioritizing tourism and travel, 26th, and natural resources, 31st. Now, we can go into a discussion on why, but one of the roles that I'm hoping to play via the National Agency for Public-Private Partnership is forge PPPs in order to create the required infrastructure, whether it is soft or hard, infrastructure that would in fact propel Sri Lanka beyond its rather mediocre ranking in terms of tourism competitiveness. So some of the initiatives, if I may add, that are ongoing. refurbishment and upgrading of regional airports. That's not a PPP, it's been done as a public investment. Unfortunately, the expansion of the Colombo airport, which is reaching, which has already reached capacity, has got delayed because of the initial pricing for expansion of the airport being 40% above what the government expected, and there are some renegotiations going on in that respect. I'm also in charge of creating PPPs for scheduled domestic carriers to the main tourism destinations, and I'm happy that the first aircraft has already landed, and we've structured a PPP to use some of the tourism development money that's lying idle in the tourism authority to in fact provide a capacity guarantee for private operators to fly to the East Coast and the North on a daily schedule basis at an affordable price of about $100 to $115 per head. I'm hoping that would get going before the April season. I'm also entrusted with the restructuring exercise and PPP process for Sri Lankan Airlines, which is losing quite a bit of money every month and is technically insolvent. But we believe that through a PPP process, we can attract the sort of partner that will make this a growth airline and in fact be a boon to the tourism industry. I've also been entrusted and restarted the process after the 52-day hiatus of privatizing the Hilton Hotel and the Hyatt, which is partially constructed. The financial advisors are already well advanced in the work that they're carrying out, and that's Lazards of Singapore. We are also proposing to do a few public-private partnerships on real estate, including a exhibition and convention center at Port City, which could again attract the MICE tourism market. On digital infrastructure, I've been rather disappointed in the slowness of this government to promote a transit smart card. A lot of work has gone into this. Now, one of the issues that tourists have today is that it is extremely cumbersome to use our rail system and our public transport system using cash, etc. So a transit smart card is the way forward, and I'm struggling to bring various stakeholders together in pushing this forward. I've also initiated a policy study to see what Sri Lanka can be when Sri Lanka can become a destination for retail. So we've hired a retired official of the Finance Ministry to look at all the issues that are impacting in diversifying Sri Lanka's retail product even greater. There's also an e-passport scheme. I don't know whether many of you knew that we have Thomas de la Rue, which is the world's largest security printing company, who have been operating in this country for 20 years. And it is rather shocking that the government has not worked with them to upgrade our digital infrastructure in the form of smart passports, etc. So these are some of the initiatives that we're taking. So they sound somewhat disjointed, but my role, though, is limited to looking at structuring public-private partnership transactions that, not just in physical infrastructure, but in areas of tourism and digital infrastructure as well. Thanks.
Sure. Thank you very much. Hishan, Jhon Keells is witnessing growth in hospitality in its own home country. As a major Sri Lankan hospitality company, what is your view on the industry and how do you see it going forward?
So Jhon Keells' view is quite apparent if you see the skyline in Colombo. You see Cinnamon Life, which is the largest private sector investment in Sri Lanka. Jhon Keells has invested $900 million into that property. We have a hotel which will have 800 rooms. We'll have 2 apartment blocks, 1 big retail space, as well as a commercial building. So it's a big bet on Colombo, big bet on Sri Lanka, which Jhon Keells has taken. And in terms of looking at outside Colombo, Jhon Keells and Cinnamon Group's view is that Cinnamon Hotel's growth will come from Sri Lanka. And we're looking at a big expansion, looking at a lot of the leisure travel. When you consider the Sri Lanka arrival numbers, we had 30 years of war. in 1990 we had 300,000 arrivals, same as Vietnam. Now Vietnam today is 14 million, and we are at 2.3 million. So since 2009, we have grown double digit every year, barring 2017 because we had few issues with the airport. Last year was 10.3, and this year 2019 we feel is going to be big, and it will continue to grow. And when you consider the regional markets, Sri Lanka we feel is underperforming at 2.3, and we will, regardless of what the government does and what it doesn't do, we feel Sri Lanka has a capacity of achieving 4 million to 5 million tourists within the next 4-5 years. And that needs a lot of rooms, that needs a lot of investment from hoteliers, and we are betting on that growth.
And any growth with domestic demand as well? Or it's mainly
yes,
inbound?
Growth demand from local market as well. We've seen that growth coming in. Per capita incomes are moving up. Now we're at about $4,000. So when it starts growing, if you look at markets like India, 40-50% of their occupancy is internal.
Right.
Sri Lanka, it's still about, at the 4 to 5 star level, it's still about 15 to 20%. So that will have to also grow. So that's one of the areas that we're very keen on.
Thank you. Roman, you started your company in 2006, is that right?
Correct, yes.
You mentioned about your mother being Sri Lankan. And
yes, it's always
what really brought you to Sri Lanka?
Never the best reason to invest, but I think it's most probably ends up being the best reason to invest here. So I think you've got to love the place, and there is a lot to love about being in Sri Lanka to invest here. So my mother being one of them. In terms of returns, I think it's a slightly different story.
Okay, we'll get to that, but tell us a little bit more about the resort that you built in South.
Well, I'm a bit of a turnaround guy. I tend to buy existing companies and improve them. That's what I was trained to do for a long, long time. So I bought, and I believe in location. I'm a real estate guy. So I bought a existing beach resort, Unawatuna Beach Resort, which is an exceedingly famous property on absolutely the best beach in the country, and did a buyout, which is a much more expensive way to do a hotel. It's better, of course, to do a new build, easier to build a group of staff up and get the service levels you want rather than trying to transform an existing culture. Change management in Sri Lanka is not easy. But of course, you end up with a unique location. So you can't fault the property, flattened everything, rebuilt it, and did some lovely pools and infrastructure. It's just a beautiful, beautiful location. And there's no shortage of that in Sri Lanka. So in terms of opportunity, brilliant locations, you can turn the corner anywhere in the country and you're going to come across some stunning vista. All of that Sri Lanka has in spades.
So you have one operating hotel that you invested in?
Correct, yes.
Do you have anything in the pipeline?
No, so I have cancelled the pipeline.
Okay.
So there was originally going to be a pipeline of 5. We were going to invest, $5 billion as the first phase and then do some more. I've capped it at the initial 2.5 that we put in. The balance 2.5 has gone to my new favourite frontier economy to put hotels in, which also has political incompetence and governance problems and a depreciating currency. It's called Britain.
Which is that favorite?
Which is the other half of me. So I have this on both sides. But in terms of returns and transparency and infrastructure and a whole load of other things. So I'm running a scientific experiment. I'm matching beach resort in the UK here, matching investments, similar number of rooms. To be fair, I will be expanding the rooms and the investment in Una. But I'm not going to continue to build a portfolio of hotels. I still believe in Sri Lanka from a domestic demand story and as an export thing, so I'm building export businesses. But for various reasons, I am less sanguine about the attractiveness of hotel investments.
So you're clearly looking at, as an investor, not to build a brand of hotels?
Again, both, right? I would build a brand or I would flag, but that's not the issue. The issue is not Do you build your own brand, which we're looking at doing? Do we flag with you know, an IHG or whatever, which I was also looking at, or Marriott? I'm an economist. I'm a development economist. I've been in emerging markets for a long time. I always recognized that hotels, one of the reasons why guys like me in my former world were cautious on hotels is because they're subject to geopolitical risk. But that's meant to be big macro stuff, like people blowing you up and terrorism and so on. But there's a new kind of risk that I've learned here, which is hotels depend on the state and government. So many aspects of them, from destination marketing to lift, because lift is essential, which depends therefore on the airlines, freedom of skies policy, and open skies, the quality of the airport, the quality of running the airport, the charges from the state to visitors from arrival to individual destinations, because this is a place where people go to see stuff. This is not a giant shopping center like Singapore. There's actually fantastic stuff to see and do. All of that is under the state, and so there's governance risk, not just somebody trying to blow you up. You can be a safe destination where you don't have terrorism, but if you have very poor quality governance, poor quality development of infrastructure, and a state that seems to hinder rather than help, in my view, you can be the best hotelier in the world. And
you both know each other, right?
A lot of fabulous hoteliers here.
You met earlier.
And no shortage of brilliant minds in policy making coming up with great policy.
You can see changes coming.
But investors and hoteliers, however good they are, it's a country full of great hoteliers, and they're all working very hard, the private sector. Jhon, Keells, Jetwing, they should all be given a medal, I think, all these companies here, because they stay committed to Sri Lanka as I do. And no lack of policy ideas, but the state stands in the way. And starting, as I said, with the airlines and lift. And the cost of lift. And I'm just voicing what everybody thinks but won't say. There is a very good Ceylon Chamber of Commerce, which is the establishment paper, and even they, who normally don't say anything, I think it's called Troubling Numbers, they describe the tourist experience here, which we all know is not great. They describe the cost of landing. I think initiatives like what we just heard would be lovely if you welcome to Sri Lanka when you land. But a better welcome, quite frankly, for our level of tourists would be welcome to Sri Lanka, and you don't have to pay for a visa. And then when you go to the Gul Vihara, which he mentioned, which, by the way, for those of you who are not Sri Lankan, I think is the best bit of Buddhist sculpture in the world, in Polonara, the lying Buddha, it would be lovely if it only cost you $10 to see it, not 30 or 50. And so the collective fees imposed and the difficulty of traveling around and just the expense of coming here. A lot of people come here once, and the reason why our numbers, Vietnam's gone from 2 to 14, and quite frankly it's got less cool stuff to see and it's not as beautiful a country, and we've gone from 1 to 2, is because it's expensive. It's very expensive.
So clearly what you're saying is that the state has a big role to play to really encourage people like you to invest in more hotels in the country.
Yeah, and the other thing is you need destination marketing. I think now we've heard 3 or 4 people, including policymakers, saying we've got all the tourist development levy that we pay sitting in a fund doing nothing. But that's outrageous. We're all repeating that 10 million is there, and they haven't done any destination marketing for 5 years. But in those 5 years where nothing's happened, we've all got hotels to run and beds to fill. It doesn't wait. So this is not London or Paris. We need to destination market it. That's the state. And people need to fly here at a reasonable cost. That is the state. And they need to visit attractions at a reasonable cost. That is the state.
Great. Well, you made some interesting points. Back to you. 11 operating hotels. I would imagine all of these are owned and managed by your company. You have separate companies, right? Owning companies and managing companies. Okay. But all are under ownership. So as a big Sri Lankan hotel company, your challenges might be slightly different from what Roman just mentioned. in his case. So what would be the key 2 or 3 challenges that you would look at when, as an investor?
I think from Jhon Keells' point of view, we have out of our 11 properties in the country, we have majority ownership of 10 of them, and one is a minority owned. I mean, the things that Roman also said resonate with us in terms of destination marketing, improving the connectivity. One thing to add, Roman, is about the highway network, getting places faster. So that's in the pipeline, but it has to come as well. In terms of challenges, I would say, like we said, the numbers will grow to close to 5 million in another couple of hopefully 4 or 5 years. The challenges is in the getting talent, also getting the labor force also into the industry. And what we've seen is, I think one of the panelists from another panel also mentioned this in terms of the quality of talent and the interest in the industry. So that's also a challenge that the private sector also has a big role to play in. And we believe as part of Cinnamon is also to inculcate this whole industry environment where we can develop talent. So that's a challenge that we're taking head on and developing. Another area is in terms of building hotels. Construction cost has been a challenge for us. Building newer hotels has become more and more difficult with the construction industry challenges that they face. I know there have been few Chinese companies coming and making it competitive in terms of building cost. But again, there's a big shortage of labor that the government can help in terms of loosening labor laws around that, which they have as well. And also in terms of speed, when you compare the construction costs around the world versus India, in Sri Lanka, it's very high in Sri Lanka. So that's another challenge that we need to kind of look at. So those are the 2 challenges in terms of, apart from what Roman also mentioned.
Great, thank you. Thilan, a different perspective now, no longer looking at the policy making, but as an entrepreneur.
Let me respond as an entrepreneur, and I can, whilst I agree with the, Roman, my colleague on the panel, mentioning that the government could have done better, I do not necessarily agree with the fact that returns have been poor. I'm yet to be a part of, whether as a new development or as a refurbishment of even a single property that is not profitable, that is not giving a decent return on investment. And that is because my partners, I'm just a minority partner in Dilma is the majority partner, A, had deep pockets, B, invested in hiring the right CEOs and the management and in training, and considerable time went into understanding what is the product that we are going to create that will project Sri Lanka in its correct context. And of the hotels that I have run, Asian hotels, sold it to Jhon Keells as a profitable enterprise. I was one of the founders. I was on the board of the Fortress Hotel when it was being built, representing Dilma's interest. It's an extremely profitable hotel. And I don't want to mention statistics, but I can mention to you at GOP level, Ceylon Tea Trails makes a GOP of 58%.
And that's the question that I wanted to ask you. What is the secret of the success of Tea Trails?
So let's not just focus on Tea Trails. Hotels that have made money in this country, in fact, I have predicted hotels would lose money even before they broke into the foundation. When I saw the plans, I said, this is the wrong location, wrong positioning, wrong product for that particular site. So I believe that whilst the government has not done enough, we have had quite a few first-time hoteliers, quite a few people who bought assets at overpriced levels, who have made fundamental mistakes in terms of overinvestment, going well above budgets, not picking the right location and designing the right positioning for that particular location. So I, as a potential investment banker, I'm waiting for these to come to market at below construction cost. So yes, it is a classic case of a country that had 27 years of war. War ends literally overnight, and you had a bandwagon of people who dive into building hotels, including a whole host of legacy hotels. I would have, frankly, knocked down a whole host of legacy hotels and built new, because these were 40-year-old products, which were sort of refurbished in a particular manner. So there was this irrational exuberance that build any old box and they shall come. So my view is somewhat contrarian. We continue to be very rigorous in the various boards that I serve, very rigorous in terms of our analysis of capex and location, land pricing, etc. And we are also, I sit on the boards of hotels where Minor Hotels is a partner. And Minor Hotels has extremely deep pockets. They have invested, I'm speaking on behalf of Dilip here, about $100 million here. Yes, one or two of the hotels are struggling, but it does take time sometimes to establish a particular destination. So if I were to really tell one lesson, one critical lesson that I've learned almost by accident when it comes to building a hotel, is the experience of T-Trails, where we opened our last bungalow just before Elam War 4 broke out. We were extremely worried, and the general convention wisdom is the war breaks out, immediately drop rates. Our Swiss CEO came to board meetings. We all collectively agreed, no, every year during the war years we raised our rates. We did not drop rates. We in fact increased rates 10% compound annual. And we made positive cash flows during the war years. And that is when it dawned on me that we had done something right in terms of PR, in terms of creating a unique enough product where the brand of the hotel overrode the brand of the country. People were saying, hey, there's a pioneering venture somewhere up in the hills, which people are writing about. Condé Nast was writing about it. I mean, the only advertising expense we spent was making sure that the tourist board flew some journalists down to Colombo. We just paid for their vehicle expenses to go to T-Trail, and we just said, write anything you want. So to me, the key lesson is, yes, a country needs to be branded, but that destination, including whether it is a region or a hotel, also requires the correct type of branding. And I firmly believe Sri Lanka needs more international brands, so we leverage on the marketing budgets of those international brands. Yes, we need independent brands, but fundamentally, we need to, from a government perspective, position our country correctly. We cannot be just a hodgepodge destination where, if I were to just quote, sorry if I'm talking too much, why we are ranked low in the competitiveness index, narrowly concentrated in pockets and in areas, where the environment is under strain, and potential areas not being developed and marketed correctly, poor asset and destination management, value chains are shallow and inadequate product diversification, poor interpretation and visitor experiences, and limited emphasis on human capital development. So some of these aspects fall right in the realm of private sector responsibility. Some of these are in the realm of government responsibility. So I think it's even more important that when it comes to formulating the boards of various tourism development authorities or tourism promotion boards, that the public sector and private sector each reflect on, the 10 years of now post-war development and look at what has gone right, look at what has gone wrong. Let's look at repositioning the country and marketing it in the right way and developing the right product to support that particular marketing strategy that has been decided on.
Sure, thank you. Roman, you have various business verticals. You have real estate, hotel, and food and beverage. Which particular sector do you think, in terms of return on investment, is the most attractive for you?
Yeah, by the way, I agree with all of that, right? I was just talking about the state, but I agree with that. We were not here talking about past investments. I'm very happy with Unawatuna Beach Resort, but your question was, will I be doing more?
Right.
And as you correctly said, I look at supply and demand. The demand has not gone as fast because we all accept that, we should be at 5 million by now, we're at 2. So having done Unawatuna Beach, which is fabulous and a great location and all this kind of stuff and done very well, would I do more? No, because as you say, there's huge amounts of supply has jumped into the market. That's why I find other verticals now more attractive. A lot of them, I agree, are rather amateurish or wrongly located, or everyone wants to become a hotelier and everyone's become a hotelier. or a boutique hotelier. Well, I get most scared when I hear the word boutique hotel. Yet another boutique hotel round some corner of some unknown place in Sri Lanka, notwithstanding the fact that every corner of every place in this country is beautiful. And often you understand why have they put it there, what's the purpose, what's the value proposition, But I have to take that into account. The market is now so full of these, and because it lacks, it's all local development and not big international brands with their, which should have happened more than it has. For me, the maths looks better in things like food and beverage.
And which is what? It's a coffee chain?
Well, that's one of them. We're doing restaurant. We're doing, you know, they're guys who do fast food, and I play in the middle class, what's called quick service dining, and I'll be doing a number of those concepts for, in fact, for big flag brands like the Shangri-La, and for some of the big developments. Export from here. People seem to think that, you know, they knock Sri Lanka as a place where you can't run factories, and we all know that costs are high, labor is high. But actually, I find that my manufacturing capability and the quality of labor is, for higher end value-added stuff, is very good. It is a good place.
So that's number one in terms of
to
ROI.
run a factory. And so ROI will not be, the return on investment will not be higher. Hotels, once you, it's a fixed cost, marginal economic, I don't want to become too much like an economist, marginal return business. So once you clear your 60% occupancy, the ROI on hotel investments is very high. I look at a risk-adjusted volatility return, and food is far more stable because it's far less susceptible to people shutting down the airport or having a constitutional coup and having to prime ministers, so you get a whole load of winter cancellations, or a flood, or a dengue, or some riots where they burn. You know, food is food, and people will go and eat. So returns remain good, but the volatility in hotels, and it's a very capital intensive, return on the huge capital you have to put in with a lot of supply is less attractive than the same return in more stable food.
Sure. Okay. The next question, and all of you need to answer one by one, and maybe you can take it first. Your top pick for your next destination or hotel in Sri Lanka?
Top pick.
One destination.
I think in terms of connectivity, in terms of attractiveness of the destination, still the southern coast plays a big part of our growth potential. From Cinnamon's point of view, that southern coast up to now, after the Hambantota leg of the highway opens up hopefully this year,
right.
It will open up a little deeper down south, we call it, and that area will be the next big area for us to invest in, from about Mathura up to about Hambantota.
Thilan?
I would pick Potuville near Arugambe, and I have a conflict of interest because I co-own a piece of, rather a large piece of land there. And I'll tell you why. As you mentioned, highway is getting extended to Hambantota, so travel time will reduce by 1.5 hours. The Batiklo airport and the Ampara airport, which is the closest, have been refurbished, and very soon domestic flights will commence. And thirdly, it is within 1 hour's drive to 3 game parks, and wildlife tourism is taking off. I'm talking on behalf of another hotel. I believe Uga is getting $800 room nights at Yala. And fourthly, this particular plot of land has 1.75 kilometers of lagoon and 1.75 kilometers of sea with 2 surfing points, and Arugambe is ranked as one of the top 10 surfing destinations, which is just 5 minutes away for level 3 or some medium level surfers. So just as much as we were able to establish a tea destination in a new location, we think that, I think that Yala East and that stretch of, that neck of the woods is where the next destination is going to be, where on the one hand, Arugambe, you will have your surfers and the nightlife, and then you want a quiet sort of place where you watch birds or, wild elephants in the lagoon, you come to Potuville.
And not taking into account the adjusted risk volatility, what's the destination that you would look at?
Then for me, I agree that the south coast is fabulous, and if Hambantota, the extension is complete and the airport is switched on, that It still has huge potential, but to be different to that, since you know I'm a big believer in the Riviera of the South Coast, I would say the only other thing that still tempts me to put another hotel is Ella and the Ella Gap, because there, in terms of just sheer transcending, you know, no destination marketing and all the issues in Sri Lanka, it's so stunningly beautiful. Sure. It's so undeveloped. It's such an extraordinary valley, and the vista that opens up, and there isn't anything that is highly developed there yet, done well. There is nothing flagged to international standards. There's some interesting eco-camp kind of things. It is, you know, paradise on earth, Ella. So I think someone should do that.
Hishan, your big project here, you briefly touched upon Cinnamon Life. Tell us a little bit more about it. What are the key components? There's an 800-room hotel. I want to know if you have plans to manage it on your own, or you have a hotel company that could manage it. But that's going to be a separate discussion after lunch. But tell us a little bit more about the project.
So Cinnamon Life, like I said, is the largest private sector investment, $900 million. And the hotel part of it is at 800 rooms. In terms of, it's built around, I think one of the panelists, earlier panel spoke about the MICE market in Colombo. So it's built on that concept of transforming Colombo as a destination. And so Cinnamon Life will have 5,000 seat capacity banquet space, multiple banquet areas. We'll have a cantilever banquet that opens up glass. I mean, it'll open up 3 sides of the banquet hall outside. So that will be magnificent. That will be the best banquet space in Colombo. In terms of other things, we will have a big mall, which kind of works well with the MICE market that we're trying to target. And talking a bit more about Life, we will have 2 apartment blocks, which we have already started selling. The first apartment will be handed over hopefully in 2020, and the hotel will open 2021, early 2021. So that's the plan for the Cinnamon Life. And in terms of operating it, Cinnamon Hotels is planning to expand through operating. So Cinnamon Life operation will be with Cinnamon. And looking at Colombo, if I can speak about why Cinnamon Life, why we invested $900 million. If you look around Colombo, it's growing. I mean, there are a lot of big brands investing in Colombo. And being so close to India, we feel that's where the advantage lies for Colombo. And India outbound travel growing year on year. And in terms of Colombo being positioned well to take advantage of that in terms of the MICE business as well as leisure business. So that's Cinnamon Life.
Great. It's a
may make
very big
one
project.
comment as a
Sure.
policymaker, wearing a policymaker's hat. What would be my priorities? One, address the issue of upfront construction costs. I mean, I believe when it comes to incentivizing the development, we do have some unfortunate taxes imposed that makes hotel construction expensive. The finance ministry is looking at this very seriously at the moment in order to jumpstart new investments in large-scale hotel and real estate development. Number 2, you cannot ignore Port City. Port City is designed to make Colombo an international hub, a place where the entire world can congregate, live, work, and play. And if you look at the various developments that are planned at Port City, and you will see these being constructed over the next 5 years, Colombo for sure could potentially attract another 500,000 tourists. And take our average room night spent in Colombo, which is the lowest out of the average of 10.5 days, 1.7, potentially could double. Now, if Colombo attracts 500,000 more tourists and 50,000 want to do the resort circuit, we don't have the product. So that's by and large what I would do as a policymaker, create a greater diversity in terms of entertainment, retail, and other options, providing ease of doing business within Colombo, and then certainly the regions and the peripheries would benefit.
Okay. A common question to all of you. Just give me a range, number of years. What do you think is going to be a payback period for a new hotel? in the location of your choice, the destinations you mentioned, what is the payback period you expect for a new build hotel? How many years?
In terms of, if you look at a resort offering, I would say in terms of projection growth, we will say payback about 7 to 8 years.
Okay. In your case, Roman?
Yeah, it's boutique hotels can pay back in 5 very niche offerings with high rates, but generally it's 8 to 10.
5 is very encouraging, Thilan. Maybe
T
Trails was even sooner.
Yeah.
I think T Trails, the payback was about 4 years.
4 years. Great.
I would say internationally branded hotel with a villa for sale offering, 5 to 6 years.
Okay.
Without a villa for sale offering, 7 to 8, maybe 9 years. Within Colombo, which is witnessing a glut of hotels, if you assume that other developments like waterfront or whatever is not happening and we won't have additional entertainment, I would do internationally branded service departments, potentially some of those being sold strata title, and I believe we can get a 5-year return.
Okay. From a timing perspective, do you think it's too late to come to Sri Lanka and invest, or this is just the right time?
I think those who invested during times of uncertainty, land banked, have obtained results. I think you have to take a view that late 2019 and 2020 is an election year. Right. There'll be a government that will come for a 5-year term. Yes, we do have the ups and downs that you spoke about, Roman, but nevertheless, this country is extremely safe. There is rule of law if you look at it relatively to other nations. I mean, I myself, my family, my wife, we all feel very safe here. And secondly, we've got to look at the fact that our friends to the north, the more there is uncertainty in the north, I think more we can attract, when I say north, our friends in India, the more I believe that we can attract tourists from India as well as investors from India. Right. So I would say, look now at
so not too late. We haven't missed the bus yet.
No, I don't think so.
Hishan, luxury, upper upscale, or moderate tier? Which sector to invest?
I think
top pick. Yeah.
In terms of investment, I think a lot of people are talking about very high scale. I mean, T Trails was a trailblazer in that. But in terms of Cinnamon's focus, we are from mid to upper scale. We have Cinnamon Red in Colombo, which was a lean luxury product, and we made our money back very sooner than 5 years. So that was a.
So that should be the focus. Roman, moderate tier, upper upscale, or luxury?
I mean, I did also land bank. I mean, I didn't realize if you include the service apartment model and resi component, which is a different conversation. That's the direction I'm going in. So I'm still investing. But
that's going to be in Colombo. What about?
Well, Unawatuna, as well as Kandy, as well as various other places have land banks. So I'm looking more, I think it's attractive from the point of view of Phuket, Bali, have my piece of paradise and service apartments. And I'm very interested in the aging model and people getting older, wanting to retire. And as a retirement destination, I think this is fabulous. So for me, I think it's very attractive investing in that, which is not for me hotels. That is which is why I didn't talk about it. It's a real estate and property game. I'm supporting the hotels, as I said, with food. You're all my customers. Cinnamon, you're eating my food. Goldface, you're eating my food. I think hotels need help bringing costs down. And so I'm going to back-end hotels for food and do the real estate service department, like the Dusit Thani model, but with less hotel component. I've got that already. More apartment model. That, I think, is good.
Thilan, other than your own hotel company, and this question is going to be for all of you, other than your own companies, which is the smartest hotel company in Sri Lanka? The smartest investor?
I believe in terms of ROI, it would be Cinnamon Red. Correct me if I'm wrong. Jhon Keells made a mistake. They took only 25% of that company.
Absolutely.
And they understood the budget hotel market and was the first out of the window. And I think that has already given a payback in a very short period of time.
Great.
So.
Roman?
I would say the guys who were the first on that model, and Cinnamon Red, I believe, copied it, and that was Bob Kundamal and Ozo.
Sorry, which one? Oh, Ozo.
Bob Kundamal and Ozo, I think, did it first. It was a very smart model, great ROIs, and my understanding is Cinnamon Red, which was brilliant, was a copy of Ozo. So I think that model works very well.
Hishan?
So Cinnamon Red in terms of...
I said, but it can't be your own. Somebody else.
In terms of, I mean, we see hotel investment, I mean, Jetwing has invested a lot in the boutique space, but in terms of, for us, our focus is in the mid to upper scale. There are a lot of local companies who are investing in that space, and like Roman also mentioned, we've been through a lot of pain during the war, during a lot of strife. So in terms of, I think we need to pay kind of appreciation to these businesses like Aitken Spence, like Jetwing, who had been through this and now trying to invest to the future as well.
I'm not sure how many potential investors in this room, but if you were to give one word advice, invest or not to invest, what is your verdict? Let's start with you.
I would invest in training.
Okay.
And that will feed the software that I need for the hardware.
Okay, Roman.
In fact, I'm on the board of William Anglis and the Australian hotel company, and we are about to scale that business. It's been here for 4 years. I would, education has been very profitable in this country.
Okay, invest. How about you, Roman?
This is to invest or not invest?
Yes.
If it's pure hotels, no, unless it's a, Ibis, Novotel, an internationally branded, low-cost in-out model. But if it is mixed development with an emphasis on strata-titled resi component and retirement-based, absolutely invest. But get the location absolutely right, and it should be in the Riviera belt.
Okay. I mean, coming from Cinnamon Hotels,
right.
we are planning of investing, and we'd like everyone else to invest, because I think in the short run, Colombo has seen a lot of supply, and we feel for the next 2-3 years it will be the case. But even outside, there's a lot of supply that came in. But overall, looking at a longer term view, there's a lot of potential. So we feel invest.
The verdict is clear. It's invest, and invest if it's not really luxury, and if it's a mixed use or retirement homes or extended stay. Great.
And cheaper than Phuket. Make the product cheaper than Phuket.
Great.
Thilan, actually this question is directed at you, because in a previous avatar you were the board of investment chairman and you have the experience of running an industrial zone. And when people like Ricardo Hausman came to Sri Lanka, they advised also to have tourist development zones. All the issues Roman is bringing up, the challenges that an investor has, to a large extent you can make it much easier for them by wrapping it around a development zone. And if you look at originally Bentota, I think Jeffrey Barber designed the whole area, even the railway station, etc. Now, Port City is an external project. I mean, the Chinese are doing it, and that will have everything wrapped around it. But why haven't we replicated a tourist zone in Sri Lanka?
Yes, there is provision in the Board of Investment law. If under the BOI law, any designated land area, if you declare it as an area of authority under the Board of Investment law, no local government can levy rates or taxes. You deal with only one agency for all your building plan and all your approvals, and the environmental approvals are delegated by the Central Environment Authority to the BOI. So I would say there is nothing that I believe in law that will prevent, let's say the government wants to develop Trincomalee, a 1,000-acre extent of land as a tourism zone. Declare it as, acquire, relocate any residences, find the money to, relocate the residences. Now, when we build a zone, when we built the zone, we built 9 zones in the late 1990s. We took plantation companies, relocated the people, declare it as an area of authority under the BOI law, and then investors got a one-stop service, and it was plug and play. The infrastructure was built up to the periphery of the site. It can be done. It just takes will, as you mentioned.
If you see most of Western countries, you have a significant opportunity to invest for a retail investor in the condominium hotel space, and for some reason, India, Sri Lanka, etc., seem to be way behind. I only saw one property that's actually got an opportunity for a retail investor to invest in the condominium hotel space. Any specific reason you don't see a surge in developments in that area, and what are the challenges if that is the case?
I mean, that was the very point I made earlier. If I see an opportunity here, it is in that very space, I would internationally brand that condo hotel. I would internationally brand the condo hotel, bring an international brand, and I'm sure it will provide a decent enough yield to potential condo unit buyers. Why it has not happened? I mean, we have a glut of apartments maybe, where because of the advent of Airbnb, and you know, every one of those apartments, if it is not occupied, is probably most of it is probably on Airbnb. So that could be the perception of a glut could very well be the reason why people are not putting money. I mean, it's more than a perception. There is a glut. I mean, there are one or two large hotels for sale in Colombo, but there are certain policy aspects that one can do to make sure that Colombo attracts a new class of tourists for other things like entertainment and shopping. So once those initiatives bear fruit, I would say there will be a second wave that could potentially start. So I agree with you.
I think we have time for one last question there.
Question for Thilan, actually. I represent Onyx Hospitality, who namely operate Amari and Ozo brands here. You talk about international hotel companies, more of them coming into. Is there discussion around the taxation? You know, essentially 30 cents in every dollar is taken and given to the government or to as a service charge. What discussion or policy discussion has been happening around that?
At the moment, the conversation is with the IMF. And I do understand, yes, there is a dividend withholding tax of 10%, which went up to 14%. Those are deterrents for investment, and that's one of the reasons why Roman said that I would be quite hesitant, because of the upfront tax as well as the tax on dividend repatriation, and there are withholding taxes that have been brought about. So I'm hopeful that this particular adjustment period would now be under the IMF's what we call Extended Funds Facility Program is scheduled to come to an end. It was scheduled to come to an end in April prior to the 52-day hiatus we had in the country. But the realization has occurred that our taxation regime needs to be relooked at, and the tax structure to be made more rational and more pro-investment. And that's one of the aspects I think that will get addressed during the first quarter of this year.
Thank you. Well, thanks a lot. It was a lovely conversation. Thank you very much.